what's going on, everyone? So, I wanted to answer the question that I got about, elaborating more on getting into a trade after you wait for that break of structure, and then, of course, sitting back and waiting for a pullback. So, let me go ahead and share my screen with you guys. So I had drawn this one up already because this was one of the trades that I did take, and I want you guys to kind of see like what I was looking for when I took this trade, how I waited for the pullback to happen before I initiated my long on US 30. So, all right. You see here I have this structure drawn up. So like when I'm looking at the market, I'm always pretty much looking at it from like an overall, like I want to see like a lot of information build up. So I want to see a lot of candles, higher time frame levels being broken before I'm starting to like really be like, oh, okay, this is starting to look good. Most of it is waiting. And then, of course, you guys know that I only trade on my session, which is the New York session. And sometimes I do, or sometimes I am able to catch trades that set up for me. That between that, pretty much is New York, like 8:30 to 8:30 a.m. New York Standard Time to the 5 p.m. close. So this was US 30, and if I go to, well, this is pretty much today. This entire move happened today. So this was actually a pretty nice trade to be a part of. And the setup looks very clean on the 15-minute, but not only on the 15-minute. If you go to the hour, it's pretty much the same thing. The candles are just much bigger, and that's why you want to kind of maybe click through time frames to get the price action to look like how you want it to look. But like when you're like seeing like a lot of consolidation, you're like, I don't really know if this is like a clear break of structure. A lot of people say, if it's not clear, then you want to wait longer for it to visibly show itself. So this is how it looks on the hour. So like you see all these candles are, they really look consolidated. But this particular candle on the hour chart is what would have maybe brought your attention to the charts, because on the hour, during this hour, this is where a lot of volatility happened in the market. It's around 9 a.m. It's an hour before the news had happened today. We had quite a few news at 10 a.m., 11 a.m. We had news at 2 p.m., I believe it was. It was a lot of news today, but this was at 9 a.m. So if you were going to try to be like, hey, I'm not going to try to trade the news or anything like that, to me, I would not have had a setup like at this time, like 9 a.m., because over to the left, when you look to the left, you're like, there's like not any information to go off of, except for, you'll have to go to like another time frame, like the 4-hour daily, to kind of see where price is that. And just me knowing this pair on the daily and the 4-hour, I know, because I trade this a lot, is that it was reaching, the highs and things like that. So, um, and breaking the highs. US 30 have broke the highs already before I was even a part of this. Let me go back to the 15. So let me get to what the question is. So, elaborate more on what I mean by the pullback. So today, it's just very simple. I just wait for when I see structure broken. And so this so happened to break structure to the upside during my session when the market is volatile, not London, not Asia, but in the New York AM section, structure is being broken to the top. And the reason why I'm not counting structure being broken down at all is because you got to take into consideration liquidity and things like that being grabbed. Um, and of course, with me and learning from so many traders and things like that, and especially me following like Steve Morrow and how he views the market and things like that. Um, I know like one of the things that's very common is that like the Asian highs and lows, or the London highs and lows, when the session opens, is gonna get broken anyway. So like this pull down, like London was already coming down, like on a downtrend. And so to me, this was a trade for the London traders to trade down and break Asians low. And so I feel like this trade down was for anyone trading London or anyone trading Asia into London. This sell off was for those traders to take out that Asian low. Um, but I don't trade these two sessions, and I don't know if I'll ever teach on those two sessions, maybe in the near future, of how to get into the Asian and London session trades. It's just I focus on what I do to just keep it simple, and anybody who resonates, they could do the same thing. So yeah, I feel like, yeah, I did not count this as a breaker structure to the downside at all, because um, it had took out the Asian low, which is not my session. And normally, when something is taken out, it is still all in all gonna reverse, right? So anytime you have a breaker structure, you can pretty much plan on the market to reverse the opposite direction. And yes, no, it does not have to happen every single time, but a majority of the time it will reverse into the opposite section. So of course, my session, you get a pattern where you get this whole engulfing candle situation happen um, during the opening and things like that. This is 9:15 a.m. and the candles or price just kept shooting until it broke structure to the top side. And I don't know if you guys can see this wick, but it's way up here. So structure was broken to the top side. So when I say wait for that pullback when you see the structure broken, so now I'm in my session. My session is very active at this moment. News is coming upon us drastically, but still even with news involved and things like that, price always still goes to those target areas and reacts off of it. So that's exactly what US 30 did. It broke up, and actually this was the 10 a.m. candle. So this candle had vigorously went up, and it was actually pretty solid. But once it did reach this high, it started to trickle itself down and pull back. and then it started to pull up again on this candle, but it started to pull back even further. And so when you get a breaker structure, and these are 15-minute candles, you do have time to drop a Fibonacci on your chart, because this is a lot of time that's passing between candles. So of course, seeing this happen on the red folder today at 10 a.m., this was like, okay, breaker structure confirmation, boom, I could drop my fib on the chart. So like when you're trading, you're also working. You want to pay attention to things that are going on. You don't want to really miss anything. Mind you, this was a whole candle at one point in time, and it just so happened to close down here. So yes, you want to consider this breaker structure. So draw your fib right here, as you can see, where the structure was broken, so top to bottom. And then so while you're waiting, you see that this did wick down to the 618 area, actually past it, almost to the 78.6 area. This candle pulled back to. So I am not so eager to jump into a trade like right when it gets to the 78.6 or the 618. I still try to look for more confluence, even though this is the area for like the best entry. Everyone wants this entry if they can grab it. Another tool I do use for point of interest is volume. Mind you, I always have like multiple things that I use for confluence. So volume. Also, you see here I have the MACD. The MACD is already clipped for buys because we had that breaker structure previously happen at 10 a.m. when this candle came up here. So the MACD already had flipped to the buying side, and then this was a pullback. So already in my mind, I'm like, okay, just need, more confluence, the better. So, what are things that I look for? Do I want to see volume? Do I want to see where my RSI is or my TDI? Like, what is it that I want to see? Oh, and then you guys know that I use trend line breaks. So, and we drop down a little bit further so you can kind of see how price looks for a trend line break. So this is the 10 a.m. candle that came up here. So my trend line would look something like this once I receive a pullback, because I'm always trying to get how can you say? Oh yeah, I'm trying to get the best entries like anybody else, right? So I do use the wicks for my trend line, and I try to line it up with as many wicks as possible. So we got something like this. And I know I got this quasi pattern kind of in the way. Just lots of stuff going on this chart. So I always need at least 2 touches when it comes to a trend line, and I try to start from like the top to the bottom or the bottom to the top and things like that, and then line it up like as price is pulling back, maybe lining up. So it might have started something like this and ended up like this, because it would start like this, but when I see like this candle kind of like come out just a little bit and then reject, of course, then I would like pull it here. And that's why trend lines sometimes can be tricky for some people, because when a trend line is being broken, you kind of want to see like like strong volume breaking that trend line before it comes back and retests. So it might have started something like that, my trend line, waiting for that pullback to see to get the first signal of, okay, we're getting some buyers to come into the market. And the way that I do it now is that at first I was doing it to where um, just like with my quasi. At first with my quasi, I was just doing that as soon as it pulled back. But then I added, oh, okay, I'll just wait for the trend line. So like with my trend lines at first, when my trend line was broken, I would just take the trade. I'd be like, oh, okay, I'll just put it behind the low or a couple candles and things like that because it shouldn't break back. But as I kept doing it more and more, I was like, it might be better if I just go ahead and not worry about if it's just going to break down and not retest. Like those ones I probably just rather not be a part of, because sometimes you get a trend line break and it just goes. It never comes back to retest. But I just said for my rules, I'm going to always wait for that retest. If I don't get it, then I'll prefer to just miss out on that trade. So you want to see it come out your trend line, and you also want to see it retest your trend line. So this retested perfectly on the 618. And still, all in all, you can choose to get it right when it retests, or you can choose for another confluence, like something like this. These two candles is a very nice candle pattern to choose to get into, because you have engulfing candle. You also have a hard rejection on the 618 area. So getting in something like that where you got your bullish, bearish, then boom, you're getting in right when either when the candle breaks or when this candle starts. That's a really nice trade. And then also you got your rejection off the 618, and then you're here now in the 38.2. So that stop loss could look pretty nice. It could be behind the 50% level, or it could be right where the 618, because you really wouldn't want it to come back here, but it is very possible that it would. So of course, all in all, it is up to the trader. The best stop loss, of course, would be down here, under the previous low. But for those who like to lessen their risk, you may want to try here. Then maybe if it pulls back to here again, then you will want to try here, possibly. Like if it did pull back here, you'll put it there. But yeah, so that's pretty much what I mean by pullback. So it's like just drawing that fib line, seeing what level it is. I know a lot of traders, they start to take their fibs off the chart. It doesn't help them, but I do still. Now for my trading, I use it as a guideline. It helps me stay organized with my TP levels, my stop losses, everything. And as you can see, this trade did go to TP1 negative 27, and also it hit a TP2, because if it pulled back to the negative 618, more than likely it will go to negative 618. And it also hit TP3. And this one, you will want to leave a runner, of course, going, because the negative 78.6 level, this candle actually at the lowest, it pulled back almost close to the 78.6. So that will be TP3 for any runners. It actually hit my little TP level that I created myself, negative 88. It actually hit that as well. I often see that level get hit aside from the negative 78.6, and that's just something that I just put that on there because I like the number 8. So but yeah, it hit that level and started to consolidate off, and actually closed at this level, and market closed. So that is what I mean about the pullback. I'm gonna show another one that I showed you guys, just so you can kind of see how it's done. All right. So I had another quasi here. This is S&P. So yeah, um, this is a waiting game always, for you to see the patterns. Of course, my pattern when I'm teaching it to you guys, uh, I tell you, you can see the pattern on lower time frames and also higher time frames. So I actually see like a head and shoulders within this head as well. Not so much like a breaker structure. So I would consider this like just like a normal head and shoulders, but my eye is just always seeing it. Just point it out here what I'm looking at. This to me would be considered just a normal even head and shoulders. Um, but with that, it's like, okay, that's a reversal pattern. That's what the quasis and the head and shoulders are. They're reversal patterns. They're signals in the market that's telling you the market wants to go in the opposite direction. But here I have drawn up like a higher time frame one that I was seeing because I do like, yeah, my go-to now in the market is that hour and 4 hour levels because I do like catching a lot of a lot of pips and things like that. It helps me manage my risk as well when I can catch bigger moves. But yes, you do have to be more patient, especially to hold those trades sometimes because not every day is going to be like a day to day where the market just shoots up or shoots down, depending on what direction. But most of the time, when these have created themselves and you are catching that right leg, that is pretty much what's gonna happen. Is gonna do that. But like all of this was like waiting for this, and there are trades. This is a trade. This is a trade. This is a trade. These are trades. Don't get me wrong, but when you see this, it's like you're ready to put your whole life savings on it because of the accuracy, the probability of you winning on something like this because it's just clean price action, break a structure, pull back, take profit. All right, so let me go back down to the 15 minutes so I can just show you guys how many days this took. So we got New York, New York, New York. So 3 days of this whole thing to create it. So on today is when the structure was broken to the upside. So a lot of consolidation, breaking, but not taking out any like higher time frame lows. So a lot of this, I don't know if anybody was looking at this S&P and things like that, but it was a lot of this. So people would say, a lot of consolidation, even though you still can make money on consolidation. And then after this low was not taken out, then you had a very strong breaker structure to the top side. So when you see that breaker structure, you want to wait. You should never, ever, ever, when you see a breaker structure, try to get into the market anywhere or over here. And I'm glad that this is happening in London because you see what's happening in London. If any traders saw these candles, all these blue candles, and was like, all right, we're just gonna ride it, to the sun or whatever, because more than likely, if you see a breaker structure, especially a higher time breaker structure, you are going to get a pullback. Even if it's blue, 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 or red, 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 you are going to get a pullback. So let me drop the fib on that pullback and what it looks like. And it's nice when you can when I wake up and I see like and I'm looking at my higher time frames, and I'm like seeing these patterns like already create itself, so I know exactly what I'm looking for in the New York session. It's like you just come to the charts and you're like so relaxed. You're like, okay, I'm just waiting for it to hit my levels and things like that. Because normally when structure is broken, it comes back to retest the structure that it broke away from. So like that's why looking to the left is just so important. So like all of this, I know it's like, okay, it has to stop like somewhere over here, because it really shouldn't be coming down here. I mean, it can, like if there's like a gap, of course, but it's like this over here, it should be like stopping somewhat. And then, like I said, the fib also helps me give. It also helps me with looking at how far it could actually pull back to. So here we go again with the fib. All right, so as New York, oops, as New York, as we came into New York, there was a lot of consolidation. I remember trading this today like it was 10 minutes ago. All right, so yeah, there was a lot of consolidation happening in New York, and pretty much same thing happened at 10 a.m. You got a big vigorous candle. I remember trading this today because it wasn't looking as good as US 30, and I was like, come on, S&P. US 30 already broke the highs. Like, what are you doing? I can remember. Um, because yeah, when you're trading the indices, you do not want to you don't want to trade them together. Some people do it. I don't know how. They sometimes, yeah, they look identical, but like in the market, like when it's volatile, like sometimes like they really can do like different things. And those, like especially like if you're trying to put like the same stop losses and things like that because you think they're gonna do the exact same thing, like that is never that I would not advise you do that at all, because the market will take your money. um but yeah, so I saw this come up here to this high, so it was just like a little bit different of how I was seeing S&P versus um the Dow. But on this rejection, but of course I was paying attention to this high because I'm like, okay, it's 10 a.m. We're at a very strong area, and it was engulfing up here as well. So probably 10 a.m. We could what I called, we could tank whatever, and that's exactly what it did. It tanked, but in the back of my mind, I'm still like, yo, it broke structure. So if it is gonna pull back, if it still continues to hold this level here where I was seeing like a lot of wicks, and it was very close to the 618 area, then that will be a nice setup for a buy. So let me drop down to the 5 minute, because that's normally where I get my entries, to kind of let y'all see what I saw. So in a sense, on the 5 minute, I'm pretty much seeing another quasi pattern in a sense, and I'll draw that up for you. It's just like I always grab that one when I don't need it. It's just like my eyes can't stop seeing it. Um, that's just how I see breaker structure now. So this is what my eyes were seeing on the lower time frame, right? So I just can't stop seeing it. And these fib levels just help me be like, okay, we're at this strong level. Let's see if it respects it and things like that. So pretty much, yeah, with the news, I got the pullback that I needed, and then boom, you know. That's all she wrote. But so yeah, you want to see pullbacks on the higher time frame. You want to see pullbacks on the lower time frame for your entries. And yeah, I'm just using the fib to just give me a sense of where am I going to put my stop loss. Am I going to put it right here? Am I going to give it some space, put it here, because it could play around in this area as well, because 61.8 is a very strong level. It actually respected this level after it broke this structure. It respected it, which is really good. S&P, the reason why I like it is because the price action is always super clean for me. So it's all in what you're comfortable with. Let me go ahead and try to do a pair. I know there's a couple pairs like GU that. And then I will also say I pretty much stick to like the US pairs because of the session that I'm trading. I know that they're going to move in those sessions. And so GU did the same thing over 2 days and made this quasi pattern. So you had your leg, we didn't get a break of any structure. So then we got a pullback, but we didn't get any break of structure. It respected this low, but of course a head can always break down low. Normally when a head breaks down low, it will, if it's going to be like for buys, it'll break back up and break that structure, but it didn't even break the low, which is cool. Still ahead. It made all of this, it gave all of this price before it gave us a signal for a buy in London. And so of course I wake up in the morning and I see in London structure has been broken, and then we get a nice pullback. And so what I do here, I would draw my fib here. And so this is that type of head shoulder quasi pattern that some people would call like what is it? I don't know. They got something where they're like 3 points or 3 heads or something like that. I don't know. It's somewhere equal three. Like they say, like for the M's and stuff like that, the 2 equal highs. There's also a pattern where you get the 3 equal highs or lows, and so this would be 3 equal lows. So what that would look like on the Fibonacci, if this isn't going past these lows at all, would be more so like my my Fibonacci level that I use, that 88 level, to get respected. I love when this level gets hit and it gets respected, like it doesn't clear out. Like if it was a buy, it wouldn't clear out the high, and if it's selling off, it won't clear out the low. I love when the 88% level is respected, because guess what? More than likely, we're gonna get a buy to this level. So it's going to be interesting to see what happens come next week or the weeks to come, to see if this level gets hit for GU. So I feel like GU is not finished yet with, but it has hit like a TP2 level, which is cool, like within the day. And this is a lot of pips. Let's see how many pips this is. So you see I have a baby quasi. Hold on. Take that over. Y'all see I got a baby quasi already. Am I on the 5 minute? Oh yeah, I'm on the 5 minute. I'm on the 5 minutes. So this is where I'll get all my entries, my beautiful entries. And I'll be looking for stuff like this. You know, I look like for stuff like that on the lower time frames during my session. So yeah, I would have seen this. I would have got this pullback. I would have been looking for like that trend line break, because I've already gotten my confirmation for buys here. So I don't know if you guys remember in my trainings that I'm always looking for my quasi pattern to show up on the lower time frame. Um, yeah, I'm always for my entry. I'm always looking for that quasi or head and shoulder to show up on the lower time frame for my entry. So it could be the 5 minute, the 1 minute. The 1 minute I do trade because right now I trade, futures and things like that. So it's gonna show up. It just does. So like maybe my trend line will look something like this. After we've hit this 88 level, I'm still always very patient because like right now it's like, you get your 930. Where's the 930 candle? You got your 930 candle right here. So sometimes just depending on, like look at all this consolidation on here. It's like sometimes you just want to wait. It's so good to be patient in this market sometimes. Now sometimes you do get your trade already set up like and ready to go. It just all depends. It all depends on the day, is there news and things like that. Like it's like when you got your chart marked up, you just know. You know what you're looking for and you're waiting, and you have to have some type of like intuition to just be like, okay, this I'm willing to take this risk and put my stop loss here and walk away. Don't watch it. Let some time go by. Yeah, let what I say, let lunchtime come. It depends. It depends on how fast the trade sets up, like when the bell rings and things like that, or if it's set up like right before the bell, like between that 8:30 and 9:30 time. It just all depends. I can only say it takes experience to figure these things out, and that's why, like, traders normally it could be off the charts within 2 to 4 hours. Sometimes you could be off the charts within minutes, if your trade sets up within, like, yeah, say you trade 9:30, like you only wake up at 9:30 and look for stuff. You could be off the charts within minutes because like maybe you already got your stuff all set up and you're just waiting between that 9:30 and 10 a.m. or 9:30 to 10:30. Like, it all depends on the trader. So a lot of people like to get out by 11 a.m. So that would be around here. They just take their money and go. And so sometimes at 11 a.m., either you're moved in, take off yet, or you're already getting out because maybe somebody did see this pullback here, and then boom, they got out here. Like, that's all they needed. And then yeah, those people who have more liquidity or leverage to hold and things like that, they're holding through this pullback again and things like that. Like, we have all different kind of traders: scalpers, swingers, day, intraday, all that. So I'm finding myself, I can get out the trades much faster than I used to with Forex because of how it's being measured with ticks versus pips. So I am learning more about my RR with that because it's very different. Like with Forex, it's like my RRs be crazy, but with futures, my RR is much like cut in half, dang near. Like I'm getting like 3R, 4R on futures versus I'm used to like 8, 10, 11 R on Forex. But anyways, I'm steering off. I'm sleepy, y'all. I've been up all day. But yeah, so we got that pullback to 88, and then my trend line would look something like this on the 5 minute. Probably I will be waiting because I am a wait. I be waiting. Ain't gonna lie, I be waiting. I would probably wait for like a pullback, and Let me see. Back to the 5. Back to the 5. Oops. So this was news. So um, I would have waited for a pullback after news, especially to see, it did not break this. Like if I see, okay, it's not breaking it, I would have definitely been waiting for that pullback. Once I got that pullback, I would have drawn my trend line like this on top of those wicks, just like that, just like that. Get some touches in like that. Then you could drop down to the 1 minute and see how that looks. So it would have looked something like that. Now, you remember how I said I don't normally take trades when they don't retest that trend line. Here goes a perfect example of me taking a trade when it does not retest the trend line. The pullback was very small. It did not come back to like this level. It just takes off. What can I say to that? Oh, did I say this was S&P? This is GU. I'm tripping. I know I'm sleepy. But yeah, this is a perfect example of it not retesting trend lines. So yes, this is me going against my rules. Taking this trade when it just pew right out and does not do a retest off of my 5-minute trend line break. But honestly, you have to do what works for you. That's all I'm gonna say. I have so many confluences when I get into a trade that how can I say? Yeah, it was just too much confluence not to take that. Not to take that even if it or to wait on a retest. Also waiting for a retest could be something like where is because we had a pattern show up here as well. So a retest could also be this pullback as well, and you're just like looking for that entry. So yeah, it really depends on that trader. I wish it would have came back a little bit more, but sometimes you just don't get that, and maybe you might just take like a candle break. Yeah, that could work too. Yeah, we could talk all day when it comes to entries, but yeah, I try to follow my rules every single time, every single trade. But as you can see, sometimes you have to bend your rules a little bit and be willing to take that risk for something like this. To me, a pullback on the 88, I'm always going to be willing to take that risk because that's a very strong pullback. That's my favorite number. Like, I'm going to take that all day, like Kobe. And yeah, I'm gonna take that shot every day like Kobe, and that risk is very small because like normally like with the 88 levels, like you could always put your stop loss here. Like if you want to be conservative with your stop loss, this is a really nice stop loss for the 88 level. But take with the trend line, normally I could put my stop loss like boom or on the 88 or whatever because it already came up and pulled back again and broke. So all right, I'm gonna end it there, y'all. I gotta go to sleep, but I hope y'all understood that. I hope that helps. Let's look at gold though. Oh, this is all I do is look at charts. I'm just trying to remember what gold. I know gold had a nice little buy. I wanted to see what that level was. So yeah, you're just looking for that break of structure. You're dropping that fib. I'm just gonna drop the fib on it so y'all can see what level it is. Boom. That's it. That's what you're waiting on. You see your break of structure. You waiting for that pullback. This level 88, 78.6, 618. These are the only levels I recommend you getting in for those strong pullbacks. Remember in my trainings I do talk about the 38.2 level. This is for continuation trades. Say you missed all of this action, you overslept. You overslept the morning session and now it's lunchtime. You getting up at 10, 11 o'clock, or maybe you didn't want to trade the 10 or 11 o'clock news, and you're like, okay, I'm just trying to, catch what's left. Then boom, you will want to catch something. You want to see price respecting this 38.2 level and continuing on into the direction that it already gave you a signal for. And then for me, yeah, I could be scaling in my trades at that level too. If I'm like, I want to pop another entry there, that would definitely be an area of interest of where I will pop another entry to scale in my trade. Especially if I'm swinging it or whatever. So yeah, let me find. I love how this is just looking so cute. So cute. On the 5-minute. I could do this all day, That's just too cute. The pattern just helps me see it. That's all it is, people. But you always want to wait for that pullback. This right here, let me take this fib out. I just want to show y'all something real quick. Because it's just price within price within price. We're just going to take that off. Boom. Okay. Let me show y'all something real quick. Because people do trade like the little 15-second, 30-second charts. We finna go ahead and drop that right there. Who could tell I'm sleepy? Alright. And we're going to pull that up. See what that pullback look like. Oh my god, y'all, I'm going to bed right now. Y'all see that pullback, that line? Like every time. This is what it is. That's a beautiful trade, y'all. And boom, like y'all, if y'all took this little baby quasi here at these lows, because this is supply and demand at this point, you taking it at the lows. That's S&D. You take it, you see that break of structure at the lows on the 5-minute. This is money, y'all. This is right when the session opens up. You got the best entry of the session because you saw the pattern. 88. Your stop loss so small right here, so small, and you took off for the rest of the day. No worries. This is what I'm talking about. So we'll be going over this, y'all, more and more until y'all get it, because I need y'all to start making some money. So we can all be making money in these markets. But yeah, it does the same thing every time. But yeah, when you see the break of structure, just wait. All right, so I'm gonna end it there. I will see you guys on the next one. Later.